Hey everyone, what is going on? It's Wilson. I'm back with another video, and I actually got an email from one of our subscribers asking me how we should be playing pump and dumps and how to profit from it and mistakes to avoid. So pump and dump, is a really great strategy for especially day traders who just wants to take advantage of the day and then profit off it and make sure you close out your session, sell the stock before the market closes, call it a day trade, and call it a day. So it's a great way to take advantage of stocks that move really quick, jump in price. But there are a lot of mistakes that you should be avoiding. And OPTT is the perfect example of a recent pump and dump that happened 2 days ago. This stock is straight pump and dump. So I want to kind of go over some of the mistakes that you want to avoid. Basically, what happened with OPTT is that there was a lot of news about some sort of contract, as you can see on the right side right here. It doubles, based on some contract with some leading oil and gas operator, and the price surged up, from $8 to up to 15-ish during the day with a massive gain. So if you did take advantage of this trend in the early trading hours, you did profit a lot. Congrats on that. But now, what if you're just a regular trader that has the PDT rule? Then you should definitely avoid these type of pump and dumps. Unless you're only making one trade and you're only looking to profit off one stock. Aside from that, you should never ever uh, trade pump and dumps um, on if you have a PDT rule, if you have that 3 day PDT rule. So, first thing that you should always do when it comes to trading in general, I repeat this in all my videos, is that you have to make sure you do the research on what is going on, right? Why is this thing jumping? And we know it's because of the contract. But first thing you do is after you know what's going on, go look at their history, right? So we look at the 6 month chart of this specific company. It's loading right now. Not sure why it's taking so long to load the chart. There it is. As you can tell, the massive spike happened right here about 2 days ago. But if you look at the company in general, it's been on a downward trend for the whole last 6 months. So we know for a fact it's a pump and dump, and it's only jumping strictly because of news or some sort of technical uprise. This is not a stock that you want to hold overnight because it's already on a downward trend. Chances are that it's going to fall back down to the support level, and we're not going to see it come back up anytime soon unless some stupid catalyst kicks in again and spikes it. But that's not a reliable trade for the long run, right? So knowing the company is always on a downward trend, this is not something that we want to buy into, especially when the trend from 6 months to 1 year has been going downwards. So that's the number one mistake you want to avoid. Make sure you do your research. The second mistake that people don't actually do is they don't really they tend to hold it, right? They tend to bag hold. And I've talked about this so many times. Don't bag hold, don't chase. That's the basic to trading. Don't get married to the stock. If you decide to get in position, which could have been a great position based on the volume, based on the spike for the day, make sure you get out. Take your profits and get out of it, even if you have to waste the day in the PDT. Get out of it and avoid this because look, it's a downward stock, right? After that spike from that specific day, the stock has been dropping ever since the last 2 days, and eventually it will go back to the original trend line. Volume will die off, and it will just be like a dropping knife where you're just bleeding money every single day. The third mistake is that people don't set their stop loss, right? It's so important that you place your limit orders. And during the day, let's say right here, at somewhat of a daily support level at around $12. Let's say you got in, a little bit later at around 950 ish. You see the spike, it goes up, goes up. Make sure you keep setting new limit orders, new stop loss. Make sure you prevent yourself from losing more and more. And then you're like, okay, it's down, but it'll come back up for a continuation play tomorrow, so I'll just hold it overnight. No, that's no good. Look at what happened yesterday. It just started continuing to drop. Now, let's talk about how you can actually profit from these pump and dumps. So what I like to do is that as a day trader, I would never swing this. Remember, I'm repeating this again because that's so important. Never swing trade a stock like this that's already been a falling knife. But let's say that I decide to get in position, it goes up, and then what happens after I sell? Let's say I took my profits at the end of the day. I sold. Now, how do I make more profit? The next day, I know the stock is already overextended. It's already overbought. And you can look at this from indicators from looking at like RSI. And then what I would do is I would short the stock and catch the falling knife and profit. So I will probably start shorting around like $13 and start just keep catching a knife until I feel like I can go and take my profit. So those are just some of the mistakes that people make, and shorting it when it's overextended is a great way to kind of take a double profit from the spike as well as the short, and kind of just get the most value out of the stock. So I hope that helped you guys. Hope the video helped. Sorry for the background noise. I'm at a coffee shop right now, but just want to make this quick video based on the email that I received. If you enjoyed it, subscribe and thumbs up, and I'll be having more videos coming soon.